Welcome everyone to HueFin News. Today is April 1st, 2019. This is your source of news before any trade decision. We're going to talk about crude oils today, one of these commodities that so many of these individuals on the financial news channels continues to inflect to us that this particular commodity is showing a lot of bullishness and optimism to where you want to expect this price for oil to continue to move to the upside. So we're going to go ahead and talk about that today. We do appreciate you all taking out the opportunity to watch this video. We do appreciate it. We always welcome your subscription to this channel, and as well your like and your sharing of these videos, because our purpose is to give you all the news according to the charts rather than looking at these long articles and trying to pick out the key aspects of what they're trying to insinuate in these articles. It's a lot better to understand language analysis and look at it on the price chart. And that's what we're here to show you all, the ability to see the news from the price chart without spending numerous times looking at various articles and trying to pick out certain aspects of what the key author is trying to say or state. Okay, so keep that in mind as we continue to look at this video today. We're going to go ahead and get started in crude oil. This was an article posted by CNBC. Published yesterday and updated today, and it goes ahead and talks about some key points about crude oil. Okay, Brent crude for June delivery was up by 43 cents or 0.6% at $68.01 a barrel. The US West Texas Intermediate WTI futures rose 32 cents or 0.5% to $60.46 a barrel after posting a rise of 32% in the January through March period, the first quarter 2019. That particular contract increased 32%. Okay, now the question is, can that continue going into the second quarter of 2019? Now, oil prices rose on Monday, talking about today, adding to the gains in the first quarter when the major benchmarks posted their biggest increases in nearly a decade as concerns about supplies outweigh fears of a slowing global economy. Now, this is the reason why crude oil has seen such a substantial increase in price. US sanctions on Iran and Venezuela, along with supply cuts by members of the Organization of the Petroleum Exporting Countries, OPEC, and other major producers have helped support prices this year, overshadowing concerns about global growth and the US trade war against China. So when you cut out supplies, that is a guarantee that demand will increase and prices will follow suit. And this is what's going on in this paragraph or this sentence that I've just read. With the sanctions that is going on with Iran and Venezuela, as long as agreements for these OPEC countries to cut their supplies, naturally you would expect prices to continue to move higher in price. Future gains will be limited by potential softness in the global economy, as well as the ability of the US oil producers to ramp up production when prices spike. This is what Phil Seibel said. He is a senior economist at National Australia Bank in Sydney, Australia. It's tough to see a really big rally from here. So we're going to make sure we look at the price chart to see if this commodity has a lot of room to run to the upside. But still, analysts have turned cautiously optimistic on crude oil prices this year, a Reuters poll showed on Friday. So there's still traders in the markets that are anticipating higher prices. So even though we have one senior economist is seeing prices continue to stagnate somewhat, other analysts are still expecting crude oil to continue to move to the upside. So we're going to pay attention to the price chart to see if we really can have a stagnation going on for crude prices. Also, the US has also instructed oil trading houses and refiners to further cut dealings with Venezuela or face sanctions themselves, even if the trades are not prohibited by published US sanctions, three sources familiar with the matter said. So this is another indication that the restriction of production of oil will raise prices. A deal between OPEC and allies such as Russia to cut output by around 1.2 million barrels per day, which officially started in January, has also supported prices. So there's a lot of deals and agreements going on between multiple countries within OPEC of them cutting their oil production. And when that occurs, the prices of oil will continue to move to the upside. Now, one of the things I wanted to point out was that Trump went ahead and did a tweet right here in this particular article. It's very important that OPEC starts to increase their supplies because he's seen the price of oil placing a drag on the economy to where it can restrict more of that global business. Okay, so we're going to go ahead and look at the price chart right now to see if prices of oil has enough room to run. So here we are looking at Brent crude oil on a daily time frame. You can still tell that yes, we can see some stagnation going on in the market for crude oil, especially right here. I would say around $70 to around $72 is the resistance area to expect Brent crude to get some sellers and some stockpile to come to the market. Okay, now over the last couple of days, this particular commodity continues to show us indication that the strength is still present. We're still anticipating Brent crude to continue to move to the upside in price. Here we are looking at it on the weekly time frame, and you can still tell that the strength is still present as well. Monthly time frame for Brent crude, you can still tell here that the strength is still present in this particular market. The only concern is that resistance area around $72. I would say $70 to $72. The market will have to break above in order to see a continuation of higher prices. So that is the current move for Brent crude. Strength is still present. The price chart is telling us on multiple time frames, the monthly time frame, the weekly time frame, and as well as on the daily time frame, that the strength is still present. A little bit of caution is still warranted due to the fact that the market is hitting some resistance or will encompass some stockpile around that $70 to $72 price. If we continue to see strength and it is allowed to break through that stockpile to the upside, then Brent crude is definitely will continue to rally in the market for the second half of 2019. So our analysis is still for Brent crude to continue to move to the upside. We're not seeing a lot of weakness on the charts right now, but the caution is only warranted for the fact that it is coming across resistance at that $70 to $72 price. That's it. Other than that, this commodity is relatively strong and it is in a very good uptrend to where we will be expecting this commodity to continue to move higher. So there you go. All you had to do is look at the price chart and it is telling you already what the market participants are expecting to do in the long term. So rather than wasting a lot of time looking at articles such as this and you're trying to pick out certain objectives as to what they're trying to insinuate regarding a particular instrument, all you have to do is understand language analysis and you'll be able to see precisely what the market is betting on, whether they're betting it to continue to move to the upside or whether they're betting on the market to continue to move to the downside. So when you saw this statement by Finn Seibel where he said it's tough to see a really big rally from here, the only reason why he stated that is because you can tell at the $70 price to $72 price, you can expect to see some restriction to higher prices. That's the only reason why that particular statement was made from him, okay? Because he also sees the price chart and understands that $70 to $72 is a resistance area and we can see some movement to the downside from that price. And we have also acknowledged that same thing just by looking at a clean price chart. It didn't require us looking at this article to understand that that is exactly what he's talking about. So It's relatively easy, simple to understand language analysis. All you have to do is continue to look at the price chart and try to grasp what is going on. And once you understand that, you can also maintain your profitability and increase your profitability as well. Again, we thank you all for taking out the opportunity to watch this video. Make sure that you all continue to go ahead, like, share, and subscribe, because we're the only organization that is giving you all the news according to the charts. Make sure you all maintain profitability. I will talk to you all later.